Price target cut over at Oppenheimer getting our attention this morning. The firm takes Apple to 200, lowers their estimates for 24, anticipating some near-term weakness for device sales due to macro headwinds. Comes ahead of tonight's Mac event and, of course, earnings later in the week. Joining us this morning is the analyst behind that call, Oppenheimer's Martin Yang. Martin, thanks for the time. I guess I'm wondering, what's the locus of the activity you're seeing that results in the target cut? Is it about China demand and what some are calling the resurgence of Huawei?
Yeah, China demand concerns one of the reasons we cut our forecast, and the other are macro-related factors. We're not seeing consumer sentiment coming back, improving in major markets, China included, and also we're seeing a worsening FX headwinds into the fourth quarter due to those geopolitical events. So all things put together, we believe that the iPhone, as well as Mac and iPad shipments going forward in the near term, next 12 months, is going to be a little bit weaker than we expected.
What's your read on demand in Europe and North America?
Yeah, North America and Europe seems to be pretty healthy. We're still seeing very robust, net adds from the carriers, and those tends to be the market where iPhone has the most stable share.
But aren't some of those concerns, Martin, already reflected in the price? The stock is down, almost 15% from the 52-week highs leading into this report?
Yeah, definitely. We're seeing, those, particularly the concerns over China reflected in the stock price, and we're adjusting our price target and estimates to that, maybe at a slightly later pace than what the stock is reflecting.
I wonder what you make about their pace of innovation. There's been a lot of reporting about, whether it's true or not, the degree to which AI sort of caught them by surprise, at least the AI craze, and that they didn't take advantage early enough compared to Microsoft, Google. There's also some setbacks regarding modem set chips and their relationship with Qualcomm. Do you find them behind the eight ball?
Not necessarily. I think we're still in a very early stage of a mass consumer adoption of AI on hardware devices running natively on our handheld devices. And Apple is definitely, on paper, seems to be later as they go to market with a consumer-facing app relative to ChatGPT. But I don't think Apple is going to lose meaningful share, currently without any competing devices on the market.
What about the event tonight, the Scary Fast event, which our Steve Kovac previewed as potentially relating here to the semiconductor or the chip production, a fast chip that Apple's got in the works? How much of that fits into the thesis to buy the stock or not?
I think it will fit into a very long-term thesis where Apple has this innate advantage of very tight hardware and software integration. And I think through tonight's event, I think one special thing about tonight's events is it is held at 8 p.m. Eastern time, which is quite different from a historical events typically held around early afternoons. And this may speak to us on, how those devices are targeting and what are the key selling points. Maybe there will be a bigger consumer-facing selling point regarding gaming and media consumption and media editing. So I think those are really key points that we're following, and especially it's in-house shipped, and how that presents advantage over other less integrated consumer hardware companies.